come on stage. Hello?
Hi everyone.
Hi.
This is Arthur here.
How are you doing?
I'm doing good. Thanks for having me here.
Cool. Let's begin. So you'll be the one sharing a lot about like how to structure a company in Web3 space that is investable. Some solutions that's built by developers that's really solving the problem in the Web3 space and beyond. And having with the eye of VC, we will learn a lot in the upcoming section. Have you prepared any like material to share?
No, I don't really have a deck. I think I'll just focus on which specific area that I think everyone find most interesting on.
Yeah, I mean, why don't we do be like a quick self-introduction? I know you've been working in the Web3 space for a while, and then you shift from the operator role into our investment role, which is very different from many like VC that we see in the Web3 space. But you're not totally in finance background. Will you also share about your journey, about how you go through, how you break into the Web3 space, and then what actually bring you the opportunity to found your own VC fund?
Yeah, sure. Thanks. I started in the Web3 and crypto space like many people, learning about it in the internet, reading up on it, doing more of my own research, and after a while, I gained a lot of passion for this space. I believe in a lot of the value and ethos of crypto and Web3, and I decided to join the space full time. So I started by starting my own crypto startups. We were want to build a crypto research product because back in 2018, I think there was a lack of good information and research for many of the projects in the crypto space. So it was actually something very similar to Masari, but we just don't have the right team and the right capital in place to do that. So yeah, so I decided to stop doing that after a while, and I also think the competitor are doing a better job. But throughout the whole journey, I keep investing, and I think this is where I found the most success. So I was one of the earliest user, participant, and investor in the DeFi space as an individual. Back then, the term DeFi was just coined not too long ago. So for everyone knowledge, the term DeFi was coined in around November or December 2018, basically to band together a group of teams and entrepreneurs that are building decentralized financial applications on the blockchain, mainly on Ethereum back then. So they just created a slogan or like a catchword for this, and this whole thing just take off. And why did I believe become the earliest one of the earliest group of people using DeFi and investing in it? It was back to the first principle that what is the best use cases for blockchain and crypto? From someone who went through 2017 and 2018, this is actually one of the biggest existential questions, because a lot of the criticism, whatever, was like, are blockchain and crypto good for anything except for speculation and fundraising? And I think that most naturally, I think that finance is the best fit for crypto and blockchain amongst all the other use cases. So that's why I focus on it. And that kind of gained some prominence and success, both from a return point of view and from my reputation point of view. So building on this success, I launched DeFiance Capital in 2020. And over the past 2 years, we have become one of the most active and recognized crypto investment firm, particularly in Asia. Two of the sector where we are the most active on are DeFi and Web3 gaming. Yep. Yep.
I mean, since you're really expert in this field, you've seen all the ups and downs, go through the DeFi summer and then the whole NFT hype, right? Now it's kind of like with the build period of time, right? With the whole winter, right? Please don't mind me to ask some very like harsh questions to you.
Sure, no worries.
I really feel like it's kind of fun to learn a lot from the expert in this field. I mean, besides DeFi and GameFi, I know you're really into it, but what's next?
That is, I think this is something that the entrepreneurs usually will surprise investor like us. I think in a certain way, the gaming side have not really proven itself sufficiently yet. We do have Axie, but I mean, one can say that a lot of the success of Axie was due to the way that they incentivized the player, and it was not very sustainable. I think there are some, this part of this criticism is valid. So I think we are waiting for the next generation of crypto games that are not overly reliant on incentives to drive the user to come and play the game, but for the content and for the user asset ownership that it can offer. Because essentially, what NFT offer is a digital property rights for digital items. Right now, is most of it are on like the profile picture NFT or the art NFT, but the use cases can be expanded to a lot of other things as well, which we are seeing many entrepreneurs are experimenting on. There's one area that I think is still quite early, but I am like cautiously optimistic on is how to combine social media and Web3. I think that over the past 10 to 20 years, we have seen a lot of changes and evolution of social media, Facebook, and then right now we have TikTok, Instagram, etc. I think generally every 5 to 10 years, we see a paradigm shift in social media scene. And I think that it is possible the next revolution comes from the crypto space, because there has been a lot of issue with how the existing social media works, the way they monetize. They basically take your data and they use it in various manner to generate profit from it, mostly for advertisement. I think Web3 and crypto offer a new way, which is completely different, where users own their ownership and data. And I think, and actually content creator can still make money. They just that not from the advertising share, but probably from some of the smaller group of super fans that are willing to contribute to see their content creator making a living by continue to create content for their fans. This is a bit like a Patreon, like a decentralized kind of Patreon, but this can potentially become bigger. So this is an area I'm cautiously optimistic. I also think that's also because the incumbents are showing some weaknesses. Facebook, called Meta now, I think their metaverse pivot was not very successful. TikTok is still doing very well, but it feels like the market penetration rate is also very high already. So, and Twitter obviously had their own issue after Elon Musk acquired it. So, I think there's quite a lot of opportunity there for different kind of innovations in the social media space.
Yeah, maybe very soon we have like, besides play to earn, we're seeing like create to earn, write to earn, post to earn, if like put to earn. One thing that I think is very interesting is kind of like in the NFT period of time last year, people kept having like keep doing like free marketing for like NFT project on Twitters, but they're not getting any like connections about their activities on Twitter or other social media linking to their wallet, let's say. So it could be something that I think also relevant to what you just mentioned about the social media plus the Web3.
Yep. I agree.
Yeah, let's look at the whole like big picture, because I mean, like, think about like investment, 5 years, 10 years, even 15 years, right? We're seeing the whole like VC lifespan. What are some like key trends of development, like trend that you've seen or you'll be feeling something will happen in that area? It could be middleware, it could be infrastructure, it could be industry, it could be basically anything. How do you kind of foresee what will be the next unicorn look like?
That area is actually very broad, but I think from my view, we are finally getting at the phase where the infrastructure are mature enough for some level of mass market application to be built on top. 2 years ago, I think it was a lot more challenging. You need to make a lot of technical trade-off and sacrifices to build an decentralized application that can actually onboard a lot of users. But I think that is getting mature enough. There's a lot of scaling solution with various trade-off available in the market right now that the team building applications can choose to develop on. So I think it to me, the next 2 years, building applications on Web3 will be as exciting, if not more exciting, than building infrastructure, because you finally have the infrastructure to support the application that can have more users. Yep. I think that is one thing that I think will be a bit different in terms of the trend. I think in the past 2 years there was a lot of focus on building the infrastructure, the scaling solution, which is why that you see the attention generally go to the scalable layer one like Solana, etc. But yeah, I think we will see more exciting application launching for the next few years. Yep.
When you say like
And
please go ahead.
no, that's it. Yeah.
Cool. You guys can also join us in the chat room to type questions. I may grab some of them. If we have time, we may actually invite you to speak directly to other. So when you say the mass adoption with the applications, I mean, like, who are the one producing the application? Do you see like the big corporate people building, let's say, membership apps, but backend with the crypto? Or do you see like e-commerce platform? I mean, what do you mean by the mass adoption of applications? Are we seeing like more like competition with DeFi like apps?
I think this is the part that where there's no industry consensus. I think I can only share my view. I think
maybe, for example, let's say your portfolio companies.
Yeah, I think okay. There's two ways. One is that you get existing big company with already a lot of the distribution to their user base to adopt Web3 and integrate Web3 and blockchain into their existing products, so that these users naturally become a user of Web3 and crypto. Another way is obviously like a crypto and Web3 company that manage to get mass adoption and onboard a lot of the non-crypto user into it. I think there's a few different camps. A lot of people believe that it's possible for, let's say, Starbucks, whatever. I mean, they were trying to integrate their loyalty point system, the membership system into blockchain in some manner. I am a bit more skeptical because generally corporate work a lot slower and they are more risk averse. They are worried about something breaking, and they also have by adopting blockchain and crypto, they also might need to sacrifice some of the existing effort and infrastructure they have built. I am more optimistic on those crypto companies they are building from scratch are able to become successful very quick, rather than like the big company, adopting crypto and onboarding mass market into it. Yeah, that's my view.
Yeah, great. So all of you who are listening are in the right place, because this what like other will be investing like individual like people who are building a startup company rather than like a big company back Web3 projects. So in terms of like founding companies, let's go through a little bit deeper, because you've been seeing many companies who come to you say like, give us money, believe in us, right? These people having like special or distinctive characteristics about themselves. So how do you see the entrepreneurs who are shifting from the Web 2 to Web 3? What really special thing about them? I mean, if they're very new to the crypto space, how should they equip to really get appealing to investors?
Yeah, I think the honest answer is there's no one-size-fit-all answer. There are some teams that we have no idea why they managed to raise any money at all. And there are also some teams that we think that should done very well that did not done as well as what we have expected. So yeah, we just have to accept that this world is quite big. There's no the kind of only one formula. That say, I think there is some traits and characteristics that will make you stand out. I think, sorry to dispel the myth, but I think generally it is not that easy for like a fresh graduate to be a successful entrepreneur for their first business. There is a lot of things that you can only learn by going through it or have the opportunity to work under some sort of more formal training. So let's say if you're like a junior software engineer, you will still benefit from working in like a tech company for a few years to learn about something that is not pure about coding, like probably in terms of product management. How do you manage your expectation? How do you manage a team? Because let's say you become a CTO, you are not just about coding, because you also actually at a certain level, certain size, you also need to manage a team of software engineers working together. So there's actually a lot of this kind of thing that you can only learn by actually working and going through it. So adding the standard, like the team background, like what kind of company they work at, the kind of accolades, credential they have, it all matters. I mean, I'm not saying that definitely need to have that, but it always helps you to stand out because when you get so much project to seek funding, you always in a way rely on some heuristic and some signals. Yeah, so let's say this guy worked in Google before, so I have little reason to doubt his technical competency, at least in the software. Let's say he's a software engineer in Google for 2 years. Yeah, that kind of means that at least his technical skill is there. Good education, all this thing, it all matters as well, but you can still get funding before it. It's just there's always an advantage if you have these kind of things. And having really done your homework and really understand the key problem and issue you're solving. I mean, sometimes VC can be wrong, and there's a lot of instances the VC are wrong. But because VC I generally have a more holistic view on the space because the VC the job is not to build. Our job is to invest and understand the industry. So sometimes VC see a bit more broadly, not just the only sector that the entrepreneur are focusing on. So sometimes it's quite obvious to us that which entrepreneur have not really done their homework. Like they have done very little market research. They are building something that someone have already done it before and already building it. So they cannot really explain to us how are they gonna outcompete these teams. Or some of these ideas already trial and tested and it doesn't work. We have actually, I would say, probably half of the project we have seen fall into this category. If they at least spend one more week doing their research and talking to people, they probably would not present the same thing they presented to us. I think it's also a product of a bull market. There's too much just do it, not enough thinking. I will actually encourage people to do a bit more homework before pitching. It will save everyone's time. And also one thing is that not every business is a venture business. Some business you might be able to make it to a profitable product and business, but the market size are simply not big enough to take VC investment. Let's say the maximum upside for certain business is only 100 million. Generally, it's not worth for VC money to come in because VC are looking for more upside. Yeah, so like if let's say I invest in you at 10, 15 million, my maximum upside is only 10 million. Most probably I'm not going to bother because to account for the risk I'm taking, I'm probably expecting a lot more upside. So that kind of means that a lot of the smaller idea will not get VC funding. I think that's just the reality of this space that VC are usually looking for a more exciting outcome, not something that can only offer like a 3 times upside or 5 times or even 10 times upside. I would say generally the lowest threshold is probably, I think some VC are okay with 10 depending on the stage. I mean, we focus on more early stage like seed to Series A, so we need something more exciting. The VC focusing on later stage like Series B and above are probably okay with 10 times only. But yeah, we want something that can achieve 20 times and above for us to be excited about the opportunity. So yeah, the total addressable market size of the vertical that the entrepreneurs are building are also very important as well. And having reputable people, successful people vouch for you, it does matters. Yeah.
Right. Well, many like questions in my mind because you're basically telling some like the terms that people communicate in the VC world, or more like a senior experienced entrepreneur, they would say, but market size, research, blah, blah, blah. I mean, for people who are very new to this scene, I mean, they may be working in a tech company because of the recent layoff, they think about opening a new company. They have not touched anything about VC at all. Would you be able to give a bit like picture about like how competitive is the VC vetting process? I mean, they come to pitch to multiple like VC, right? They hope to get some like results, right? What's actually happening behind the scene with the VC like firms? How do they do evaluation with the company? Like how many meetings in between? Can you go through really briefly?
I think every VC is a bit different. For us, we will usually arrange the first introductory call to understand a bit better beyond what is in the deck. We generally want to see the deck first before we have a call, because if we don't even think it's worth our time to have a call, then we just will not respond. I mean, it's just maybe we can't respond to everyone. So I'll probably say 80% of the cold email we receive, we just ignore it. Probably, and in the warm intro, I think we will reply, but we probably, if we are excited about the project, then we will arrange for a call. If after the call we have an internal discussion, if we think it's good enough, then we have a second round of call, or physical meeting if possible. And if they already have some product that is live in some sort of manner, we will try to test it out, demo the product. And after that, I think generally that's when the VC will really come back and think whether do they want to offer a term sheet. And that also depends on how complicated the product is and what kind of space. I mean, obviously biotech and SaaS will be very different. So it depends on the industry as well. But generally, after 2 meetings, the VC will discuss do they want to go deeper to offer a term sheet, or to just ask do a further DD. Yeah, generally I think that's it. Sometimes it can be 1 meeting, sometimes 2 meetings. The situation is a bit faster if there's already a lead investor, especially a famous one. Let's say you already have a Sequoia Capital committed as a lead investor, the DD will be lesser. Yeah, because we generally, like the reputable VC, that's why they are lead investor. Yeah.
Right. So like for entrepreneurs, like especially for them, they have not raised any capital at all in the past. How to actually increase the chances of, let's say, leading to like a DD process?
I think like what I said just now, there's a multiple factors. Okay, put it in like a game perspective. Like let's say you're playing some RPG game, you have multiple attributes, right? Strength, speed, agility, intelligence, HP, whatever. One approach is you only max one stat, and another approach is you balance out the stats. I think both approaches are viable. So it really depends on what is your age, and your age is just like you have one area that you're super strong and then you focus on it, or your age is quite balanced, then you can actually, just try to improve your chances as much as possible from a various aspect, like warm intro, like a validated product that you have some indication of product market fit, which means that your product actually have some user that actually want to use it. That would be a good, because else it's all idea. I mean, everyone have idea, but we want some validation that this idea actually works and have been validated by in some sort of manners. Yep, and the team's credential, their past experience, all these things, it all combined, it all matters. That's it. Like let's say you have some extremely veteran and experienced team, they can just raise money just by the virtue of their experience. That is also possible. Yeah. Or you just have an amazing product demo, you have no credential, you have no warm intro, but your product is so amazing, you can also raise. Yeah.
Okay, cool. So there are different forms of like capital. One of them is venture capital. We have like grant, we have like friends and family, we have like accelerators and different like money, right? How early should a team approach a VC? What are some of the things they have to show, like just being they are not the experienced people, they may be the first time or second time entrepreneurs? What are the things they have to prepare or to show to talk to a VC? Like, do not waste your time when they go to talk to high chance.
I think it depends on the space again. Crypto, it can be a bit earlier. A lot of team have raised without a demo and like a so what we call testnet phase. That is possible in crypto. In a non-crypto side, I would say generally you already have a first version of a product. You have some sort of demo and some validation, some metrics traction you can show. Doesn't have to be revenue, but some, like let's say you're building a SaaS product, like how many users you have, what's the engagement like, and how, all these kind of numbers you can show to show that you already have some validation. That I would say is a good level you can start talking to VC. And the team, I would say, if you do not have a co-founding team, a complete co-founding team yet, that's not that ideal. I think some VC can help you to link up with other founders, but I think generally most VC are not that early, because that seems to fall into like a pre-seed. You should go to those like entrepreneur first or angler that match co-founder if you haven't even have your co-founder yet. So yeah, but generally when you go to VC, you should have a fairly complete early stage team. I would say a pure co-founding team is fine, but generally a good co-founding team is like 2 to 3 people. And if you're building tech, you must have a technical co-founder, at least one. If you do not have a technical co-founder, your chances are way lower. Yeah, I think that's just a reality. Yeah.
Awesome.
Because if you don't have a tech co-founder, you do not know how to hire a good software engineer, and you incur a lot of costs because good software engineers are extremely expensive to hire. Yep.
Very true. Very true. So we've been talking a lot about the tips to approach a VC. So I mean, I hope you guys learn a little bit on that. If we have time, we actually come back 1 second on the funding on the funding side. So let me give you one scenario. So let's say some LPs are now giving you $100 million, right, to allow you investing on some big opportunities and problems in the Web3 space. What are some good ideas and problems to solve moving ahead with that $100 million that you invest?
There is a lot of problem worth solving. I think a few one that I personally feel a lot is how to balance the ease of usage of a crypto wallet with the security. So one of the biggest issue of like owning NFT is the existing crypto wallet, the way that it is being secure is not so similar to the existing non-crypto site. So a lot of people do not know how to secure their seed word or private key properly. And sometimes when they're interacting with a lot of the application, they might inadvertently give some approval to some contracts that they don't intend to, and they lead to their asset getting hacked. A lot of the NFT has been exploited and hacked before, and I think that really terrified a lot of people, and a lot of people were just very sad from this. So I think if some solution can be created to better safeguard the user's asset, NFT or token, but at the same time doesn't overly compromise the ease of usage, that is a huge opportunity. Yeah, I think, yeah. So right now, yeah, I'm sure you all heard of the story of people using MetaMask, whatever, they just got hacked. You know, they click on some link, they approve some smart contract, boom, all the NFT are gone. Yep.
What other areas besides the security that you think you may invest in, or you're expecting some startups to provide solutions?
I'm a gamer myself, so I've always feel that gamers should have more say in the games they are playing, and the ownership of the game should not completely go to the gaming company. So I'm excited for more Web3 game to emerge. That's not only fun to play, but the user have a stake in the success of the game as well. So yeah, but this is just something personal. Yeah, not everyone feels so strongly about the games.
Mm-hmm. But so far as I know, there's only 1% of the gamers globally who is really using the blockchain-based gaming. For the rest, is like normal like gamers. So it's like a huge like gap between the mass adoption. So how do you see the whole like the jump over the chasm idea about the whole innovation curve?
I think that one of the main reasons is we just have not seen a very good and successful Web3 game yet. But obviously that game have to balance the integration with the blockchain technology and the fun, the gameplay aspect of it. I think that is the tough part to get it right. So so I think that's you just have to wait. I think a lot of the venture funding have poured into the sector. If this sector, if the thesis is valid, we just at one point of time, a few projects will be able to make it happen and onboard a lot of the gamers and users into the games. Yeah.
And that's where like investors come in to support project and let them to be get more people hired and to do more marketing, acquire more like gamers, and they would see who will win eventually.
Yeah.
It's also like investors really big part. So who are also listening, you can build gamings. People invest in you right now. So the other thing that I realized about you is you're also having a big background on the strategy on the previous blockchain you work in, Sanika, right? So you're also the people who experience about building things, building communities, ecosystems for a protocol, right? We have one speaker talk about a whole topic about community before. For you, could you classify differences between a community and an ecosystem? What are the main difference of them?
I think community generally are more grassroots in the definition. That it generally refers to the individual people. So it generally refers to either a person or a group of persons. But when you talk about ecosystem, it's not necessarily just like a users or like a person. It can refer to the infrastructure that already be built on. Let's say an ecosystem of a layer one is the wallet. Obviously, you always need a human to maintain it, but let's say you have like a wallet to support. You have a stable coin on your layer one, and you have the developer tooling, all this thing. So these go beyond just like a community. It's also an ecosystem. Yeah, like let's say you only have community, you can have like 1 million users, but there's no developer tooling, there's no good wallet, there's no a lot of the other missing pieces. Then you don't really have an ecosystem. You only have a community. So there's some project that's very hype driven. Like, hey, I think it's fair to say that Dogecoin have a lot of community, or you can call it backholder, but they don't really have an ecosystem. Because there's what can you do with Dogecoin? Nothing. It's the meme coin. You transfer, you can't really do much with it. But they have great community because it's a meme coin. But there's no ecosystem, I would say. Not much ecosystem.
Okay, that will be trigger a very interesting question I want to ask is, what was your kind of like a playbook of building a community? Or like an absolute beginner who are creating, who want to create a sustainable Web3 startup. With your experience in Seneca, dYdX, and you've been seeing more project in this space, what's kind of your playbook for community building, ecosystem building?
I think there's again no one size fit all question, but I think generally you need a person. You cannot hide behind like a corporate identity, because this is like a new era where people identify more with an individual rather than a person. Generally, one of the co-founders should be the person that was like become like a speak person for the project, and be very present, be very genuine to the community, whether in social media or in like an internal community channel like the Discord or whatever. Have to be somewhat present. Doesn't have to be there all the time, but you need to know that when the community want to talk to you, you are available, and you're being as transparent as you can to communicate with the community, and you're actually hearing what the community is reflecting to you. I think that actually goes a long way. And that's the challenge, right? I mean, a lot of the Web2 founders, they build products and they get users, but not all users are community. So I think that's the difference. Like, they don't really need to interact with the user as much. But if you do it in the Web3 side, if you want to build a project that interact a lot of community, you have to do that. There's just no way around it. You have to be, talk to them on a fairly regular basis, understand the feedback, be genuine, be present. Yep.
Yeah. So you also mentioned earlier that many stakeholders in the ecosystems, right? You have like L1, multiple layers. You have like investors, you have like projects, right? But for people who are really new to this space, they're basically nothing. They're nobody. They're really huge investment to build like the next big thing. So how do you actually what were some of the tips or like hacks to actually break to let's say, for example, get the first partners, or let's say to get the people who use their tokens to build on the protocols? What are some of the things that you see when you're working with dYdX or basically very early projects? How to build a trust in the whole Web3 space? Like, just based on your experience, like some of the tips.
I think one way is just by contributing first. The good thing about Web3 and crypto is there's a very low barrier of entry. Anyone can join. Even a former fugitive criminal can be hiding as an anonymous guy in the Discord or Twitter. You never know. So the barrier of entry is low. So I think start by contributing. You can start by contributing in various manners. Like, if you are technical, you can actually contribute some code, some open source project. It's open source. So if you're a good software engineer, you can have to look into the code, suggest some improvement, That's one way to contribute. Contribute in a manner of like content, help to write some primer, enlighten the broader market about what this project is doing. Or if you have some of your connection that might be helpful to the project, you can even introduce your own contact to them to build something together. So just think about contributing first, and gradually you kind of build your name, because people feel that, oh, this guy is actually helping out as a community member in some sort of capacity. Another way is just obviously to work full time in a project that's involved. That's always a good way to build your connection and contact in the space.
And for internal, there's one term called like DAO, right? I mean, like how can a startup leverage DAO to for growth in that sense?
It might be controversial, but I think that most project should not be a DAO. If you need to ask me, should you be a DAO, then I think you should not be a DAO. Okay, you should already have it figured out. Yeah, because DAO is very tough to operate and execute. Have a lot of legal ramification you need to think through as well. Only some kind of project need to be a DAO because they benefit from the decentralization and the credible neutrality that a DAO can offer. But most things should not be a DAO. That's my view. Some things should be a DAO, but most things should not be a DAO. Yeah.
Then what should be a DAO? What should not be a DAO? What some of the considerations like for people who want to get people involved, to get like comments, to get voting? I mean, to be like a stake in the project, right? Rather, I mean, like compared to something that should be really ignoring like DAO in the first place.
I think if one is building a global oriented product or protocol that doesn't mind sacrificing the efficiency and the speed of execution, while really need to optimize for the decentralization aspect of it, can be a DAO. But you just need to know that this is a trade-off, and these trade-offs have to be worth it. Like a DAO is gonna execute a lot slower than a traditional company or startups. You also have more unsolved issue as well. You'll have to be okay with all this issue. Benefit, global from day one. You can be very credibly neutral in a way, and you can do regulatory arbitrage. I mean, in a way, this is an advantage. Like, yeah.
I see. I mean, there are also like many projects who also kind of raise fund with NFT, right, or like tokens, but they may not be launching it to like the listing platform. I mean, like that's just one thing, right? About whether to launch token, whether to liquidate token. The other part of that is about tokenization, about like real estate, or anything about like physical assets. How do you see the regulatory landscape changing, evolving, really to fit the need or to transformation of technology right now? People are trying to do something that's breaking the rules, regulations. Do you see a change in this space?
I think first of all, I'm not a lawyer, and so nothing I said should be taken as a legal advice. Depends on the country. Every country have their own sort of regulations. US is the most challenging one to navigate. Other countries are a bit better, but it also, again, depends on which country you are based at. Generally, NFT, it should not be seen as a tool of fundraising. It's just that some things that NFT is like essentially like in a way it can be like a merchandise. So you can sell merchandise and people buy it. It's just that your merchandise can be traded. So yeah, I think you should not think of it as like a fundraising tool. It should more. I mean, for certain project, yes, it can be, but generally you should not think of it as a fundraising tool. For token, I also don't think it should be a fundraising tool. It's just that if you think that your project can benefit from having a token, and a token that makes sense, yeah, you can fundraise using a token. So I think it's very case by case basis, but generally has gotten challenging to launch and issue a token. NFT, I think, is a bit more easier because it's like you can say it's essentially like a product. It's a merchandise. Yeah.
I see. Cool. Let's focus on the chat room because Meanwhile, I'm asking challenging questions. They're more like friendly questions in the chat room. Let's go through it really quickly. Yeah, somebody mentioned about the realistic tokenization. Do you have any like thought on that, or even let's say any like metaverse bridge, like online to offline tokenization that you've seen in new projects?
I don't believe in it.
What do you think? Why you have like very strong opinion about this stuff?
Doesn't make sense. First of all, if real estate tokenization already exists in TradFi, it's called Real Estate Investment Trust. Okay, so you want to get exposure to real estate, you can already get it without buying them by buying REITs, REIT. So, and the problem is like real estate is a very traditional asset class. You tokenize it, the very traditional people who usually buy real estate doesn't want to touch the crypto aspect of it because, oh, it's a new technology, I don't want to do it. But the crypto people also are not excited enough about real estate. It's a classic case of neither here nor there. So what is the target audience? I think most people who thought about this have not done their homework enough. I've seen real estate tokenization projects since 2018. None of them have made it big. Yeah, so I think essentially the existing traditional financial infrastructure already solved this. I don't think blockchain bring a significant improvement because real estate, the land title, all this thing is still tied to the traditional world. Like there's a legal register of your asset ownership. Just by bringing it on chain doesn't mean you can skip through this. Like, yeah. So you still need the actual government administer title register to transfer the ownership, whatever, all this thing. Else, where's the legal ownership? All this thing is. This is more about legal stuff rather than technology solution. That's my view.
Right. There's also one question that's very opposite to what you mentioned. So like, basically one is asking, what do you think if the founding team are mostly tech and do not have a business background? That may come up with like hackathons. People really.
I think it's actually fine. I think this is way better than having no technical founders. Obviously, the best case is you have a good balances, but there's many cases of pure technical founder being able to still become successful. I wouldn't say it's okay. The first phase of running a startup, you do not require that many business knowledge or experience and capability. It's mostly about building a good product and getting some sufficient validation for the good product. And after that, where the business kind of knowledge and skill set become more important, like when you're fundraising from VC, how you should negotiate, what kind of terms you should accept, what's the market standard right now, all this thing, then that is where the business side become more important. And it become more and more important when the company become bigger and bigger. But that's also the stage where you can hire MBA, all this thing to help you run the business side of it. But at early stage, if you do not have a technical co-founder, you have no product. That means nothing. Yeah, so I think, a very famous startup investor, founder of Y Combinator, Paul Graham, he feel it even stronger. He said that it doesn't matter. The business guy doesn't matter. Like, because it's just not that difficult. Just build product people want. That's what he said. I think there's a lot of truth in it. But obviously, I think that having a good balance is the best.
Do you see any like no code or low code platform for Web3? It's a real quick ask because I feel like people want to tap into to build something, right? We're always about the L at the capital L with the N with the build, right? So people will think about there's a huge trend with AI, this huge trend with like Web3. Why don't I learn something about coding? Do you see any like Web3 tools on that side?
You mean to learn about coding in Web3?
Build a product easily for, let's say, people who are purely business in background to validate their ideas.
No, I don't think that works. No, because if you're building a product, it has to be sufficiently unique and different from what is available in the market. And if you do not have the software engineer skill set, you're using this kind of no code or low code, you cannot get the product feature up to the level that is mature enough. Yeah, it's possible, but I think that most product you can't get to that level with like a kind of low code kind of product of kind of tools. I think the more efficient is just to learn the coding yourself. I mean, it takes some time, but I think a very smart people can get up to a reasonably good level in 3 to 6 months if he doesn't do anything else.
Yeah, maybe it's a chance for people who are being laid off from the big companies. Maybe you learn something while the economy is down, or to get a chance to join more hackathons like that weekend to meet your potential tech co-founders. All good advice to do something. I mean, like, I think like although also like know how to code. It's like a common language for people also doing investment, right? Let me see any like questions in the chat room. If you have anything, definitely you can put it down. Yeah, I think we could also like summarize this interview section, because the many things that we have to digest among the people who are listening to the 3-hour sections, from validations, pitching, and to the Web3 strategies and investment field. There are many things we need to digest. Before ending to this section, could we like convince our participants to build a company in Web3 rather than AI? Why people have to build something in Web3 space?
I think fundamentally, AI and Web3 is almost polar opposite in the value and ethos. Web3 and crypto is about transparency, open source, community, decentralization. While AI is completely opposite. Most AI work in a very black box, centralized manner, and definitely not open source because that is your trade secret. So it's like a opaque, centralized black box that operate with unknown parameters and input. Very centralized, and have a pretty dark implication if the worst case materialize. Crypto, I guess you kind of already seeing the worst case of crypto. You get all the scammers coming to this space trying to, do fraud, scam people of money, all this thing. So I think kind of in crypto, you kind of know what's the worst you can get. The worst is like, the terrorists use them, the North Korean use them, people launder money, do tax evasion, fraudster came in. But the worst that can happen to AI, it's not known yet.
Which means to make Web3 companies or like the whole landscape healthy is to make sure security. Like people get really the big trust. People put their money. People really enjoying and living with the economy with the Web3. That's really the thing that people invest in to build a foundation for Web3 in the next bull run. Maybe we will also see people combining the two things together, making something like decentralized AI, decentralized cloud to computing something with the AI. Right, there's something really sweet thing happening in between as well. Yep, I think that's pretty much with everything. Do you have like a Twitter account for us to handle for us to follow?
Yes, my Twitter handle is Arthur0x. Yep.
Perfect. Cool. Thanks a lot for sharing at late night at your time. I learned quite a lot from you about the insight about how companies can really equip themselves in the whole winter period of time. Thanks a lot for sharing. I hope you guys, some of you can eventually pitch to others and get some money from the DeFiance Capital.
Yep. Thank you, everyone. Thanks for having me.
Thank you a lot. And also thank you all the people who joined the past mentorship sections. I've been seeing many familiar faces in the ground. Very interactive, many interesting questions really help us to make the whole sections really fruitful. So.